Hello, friends. In this session, we'll try to understand IDFC Bank's current situation and we'll try to answer some of the questions related to that, whether the existing investors should hold or sell their position, should new investors consider entering at the current price? Because if you see that it's almost 33% dip from the top, and if you consider there is a potential 50% upside move at this point of time if you enter. So what we'll do is we'll try to break this down step by step and we'll help you to understand the things and will help you to make an informed decision. Let's try to understand first why IDFC First Bank is falling. See, the primary reason for the decline in IDFC Bank stock price is the weaker than expected Q2 this quarter of financial year 2025 results. So the bank's consolidated profit dropped by around 73% compared to the same quarter last year. So if you compare that percentage change, it's almost 73%, which is huge. But it's very crucial to note that this decline is not just solely due to poor operational performance of the bank. The bank significantly increased its provisions, particularly for microfinance loans and legacy infrastructure loans also. But if you see, for example, I'll give you an example. Around 315 crore provision was allocated to microfinance loans, and 250 crore provision was allocated to infrastructure toll project in Maharashtra. So these provisions, while protecting the bank from potential risk, have dented its profitability in the short term. So that could be one of the reasons. And if you look at the microfinance loan challenge, that's a key issue. The key issue lies in the microfinance segment, where 99% loan are now classified as risky. So the Reserve Bank of India removed interest rate caps on microfinance loans in 2022 to encourage the competition. That means it will encourage the banks to lend more. It is a risky loan, so normally the chances are very less that you'll get loan from the banks if it is categorized as risky. But here, because there was an interest cap, but now there is no interest cap, so the banks are willing to lend you at a higher interest rate. So that will eventually increase the competition also. Unfortunately, this backfired as interest rates surged to 45 to 50%, which is leading to repayment challenges for borrowers. So, what is actually happening when you are borrowing? At the time of borrowing, they'll commit that they'll pay that high interest, but over a period of time, these all will go as default. And over leveraged individuals, the loans taken mostly default, and the banks like IDFC First had to increase provisions, which is again impacting the profitability of the bank. Despite this, like if you see other segments like mortgages, vehicle loans, and consumer finance remain very much stable, reflecting a mixed asset quality of the bank. But the main issue is actually with the microfinance loans because of the excessive, interest rates and the default. If you see a broader banking industry issue at this point of time, the problems faced by IDFC Bank are not isolated. There are rising defaults in credit card, and various other debts, and higher borrowing cost is also there, and that is a wide industry trend. For instance, if you see outstanding credit card debt itself was increased to around 2.7 lakh crore by June 2024, and that is actually growing at a 24% CAGR since 2019. And default rates on credit cards rose from around 1.6% in March 2023 to 1.8% in June 2024. So that is an overall trend. Okay, so this signals a potential bubble in the consumer credit. So which again could impact banks across the sector, not only IDFC Bank. So here, if you see IDFC First Bank with its focus on retail banking is navigating these challenges along with its peers actually. So there is a big issue which is already there. And if you look at the bank's strength and the balance perspective, if I want to take, see, the challenges are real. It's important to highlight the strength also. See, the management excellence. At one point of time, we were talking about this IDFC First, and I was also holding so much quantity of IDFC First, because of the impression was this is going to be the next ICICI Bank. So if you look at the management excellence, the bank is led by Mr. Vaidyanathan, and whose strategic vision and leadership are widely admired and accepted. So his track record also includes turning around a loss-making NBFC into a thriving entity. Next, if you look at the technology and the products, the bank offers a wide range of innovative products, including digital loans, microcredit, and wealth management services, etc. And if you look at the branch expansion from 206 branches in 2018 to 961 branches in September 2024, the bank is aggressively expanding its presence, which could again drive long-term growth if you see. So if you see stable segments in this, though we discussed about microfinance, that's an issue because of multiple reasons, because of the default due to the higher interest rate and everything. If you see the stable segments, mortgages, MSME loans, and consumer finance, that remain robust, and that is showcasing a strong base of stable assets of the bank. Right. So, see, when we talk about asset and liability, these loans are assets of the banks. Then the deposits are liability. That's what I said. These are stable assets. So, if you look at the future outlook and the management targets, the bank have set ambitious target for 2029, which include loan book growth. Expanding the loan book to around 6 lakh crore and increasing branches to 1700 to 1800. Okay, and maintaining a gross NPA below 1.5 and a net NPA under point. Net NPA means non-performing asset is what I'm talking about. Net NPA under 0.5%. So these targets actually reflect the management's optimism and commitment to the growth. So notably, if you see IDFC First Bank's net investment margin, which is known as NIM, it remains stable even all these challenges and these challenging time and issues, which is still showing that resilience since it is stable. NIM is stable. Now the question is, should we hold, buy, or sell? See, when it comes to existing investors, if you're already holding shares and experiencing losses, consider a phased exit strategy. Gradually reduce your exposure while reallocating to stronger investments. Avoid emotional decisions and focus on long-term goals. At one point of time, Yes Bank was also similar. It was very strong, but we know what happened. And to pick up again, it's very difficult. So we don't know. At one point of time, even I was investing heavily, and I was thinking and considering this as the next ICICI Bank. Almost good amount actually have invested, but I got a phased exit also from this. But now at this point of time, since I got some exits before, I'm trying to average because I can see if it is going up, I have a better stop loss now. Okay, and if it is going up, a good potential up move is also possible. Coming to new investors, for those who are looking to enter, the current valuation appears attractive. So when we talk about a stock, the valuation is important. At this point of time, for this bank, this is at the right valuation where you can, in my opinion, that's my personal opinion, that's a right time to enter. That's why I told you, since I got the exit in between at 80 rupee, I am now willing to enter at this level because I'm expecting, because the strength is strong, fundamentals is strong, except that microfinance issue that is common for all the banks. But again, be prepared for volatility in short term. And if you are looking for long term perspective at this point of time, for me, the valuation is good. And if you look at long term potential, the bank's management strength, I already explained. Technological focus, again, very good. And the product diversification, even wealth management and everything, that shows that potential growth in the future and making it as a compelling long-term bet. I don't know what will happen in the short term, but long term, looking at all these, except the problem in the microfinance, which is actually faced by almost all in the banking sector, I don't think much problem at this point of time. And the present valuation is also, if you calculate it, it is at the best level for someone new to enter. Or if you got an exit before and still if you feel like you want to enter, this is the best time, and that's what I'm trying to do. So guys, despite its strength, there are some risk also. Risk is about the same thing that I have told you, that is a rising microfinance defaults. Now the reason also I have told you, you were lending at a very higher interest rates, so the commitment of those people were there at that point of time, but now it is leading to default due to the higher interest rate. Okay, now again, slower than expected improvement in cost of funds. Next issue is retail investor concentration, which can cause again volatility. So understanding this risk is also very crucial for managing expectation, and only get prepared for long term if you are planning to do something in this. So what is the final thought, guys? Again, IDFC First Bank is at a pivotal moment at this point of time, and it's at a very good valuation also. So its recent performance highlights a lot of challenges and issues and weakness. For me, the management, the innovation part, the technology aspect, and the long term vision offers reason for optimism within this bank. Since I have discussed about IDFC Bank before to my mentees and the friends about what I'm holding and other things, I'm getting a lot of questions about this. That's the only reason why I thought of doing this video. For me, I'm willing to bet for long term, looking at the management, looking at the innovation part, looking at the technology aspect, looking at the long term vision, looking at the way they are expanding their branches. Everything is perfectly fine except that a couple of things we discussed that is actually common across the banking sector. So again, whether you decide to buy, hold, or sell, remember to align your actions with thorough research and your financial goals. Banking is a cyclical industry, and patience often rewards those who stay informed and take such kind of decisions. But again, I tell you, at this level, market also gave a good dip, a correction, and IDFC is also at a very good valuation level. Then it's up to you. Thank you so much for watching. Consult your financial advisor before any such kind of investment. Okay, see you guys.